So, if I can ask you a question, you recently spoke about IPOs in the United States, and it is expected to have like 190 issues in 2019. While in Brazil, we have a very small market. We have, if you filter companies by liquidity and adequate corporate governance, we have like a little bit over 200 companies. So you've spoken that IPOs are mainly interesting to people playing the price game rather than the value game. What do you think in Brazil, since we are an emerging economy with new issuances coming to the market, we that are focused on the value approach, do you think, could you expand on rather are IPOs interesting for people focused on value approach rather than price?
Yeah, what makes you think Brazilian investors are focused on the value approach?
No, not Brazilian investors.
As a pricing game. The Brazilian, if you took a look at the Bovespa over the last 10 years, it's a pure pricing game. It's momentum and mood that's driven it. So it's so the problem. I mean, first, if you think about it, so if the question is why don't you see more IPOs in a country like Brazil, you have to remember an IPO is the end of a process. It's not the beginning of a process. I mean, imagine being an entrepreneur in Brazil. You've got a great idea. You want to start a business. What's the first step? You need to find people who are interested in providing you funding. If you don't have an active venture capital market where people are supplying capital to young startups, you will not have IPOs at the other end. So when governments say we want a lot of IPOs, they have to create, I mean, they can't do it. This can't come from the top down. It's got to come from the bottom up, with investors saying, I'm willing to put my money in startups, knowing that for every 10 startups I put money in, maybe 2 will succeed, and those 2 will eventually go to the market as public offerings. So if you want more IPOs, the game has to start at the other end. You got to encourage entrepreneurs, because if you're a very smart Brazilian entrepreneur with a great idea, you know what you end up doing? You end up moving to Silicon Valley, starting your business there and getting capital from venture capitalists there. And it's not just Brazil. If you're a Norwegian or a Swedish entrepreneur or a German entrepreneur, for whatever reason, the US has a history of venture capital investing, of people who invest in these startups, because it requires a very different mindset to invest in startups, which is most of your startups are going to fail. You're betting on people rather than on businesses, and you have to be given a pathway to succeed. There's another aspect of Brazil that makes it difficult for an entrepreneur to take a business and make it a successful business. The game is stacked against them. You got a system that works against you. It's difficult to break into distribution systems. I say only half jokingly that if Elon Musk had been born in any country other than the United States, because the nature of people who are disruptors is they're not nice people. And in many countries, these people will never be allowed to succeed because they're viewed as disruptors. They will not be allowed to raise capital. Banks will not lend them money. Investors will not invest in them. You need to be willing to live with people who basically live on the edge. We're not people you would think of as good, upstanding citizens. They're people who push the envelope, who take risks, who do things that disrupt the status quo. And in countries like Brazil, those people are not particularly welcome. The establishment will find ways to make it more difficult for them to succeed. So you need 2 things. One is you need venture capitalists. 2, you need to kind of open up systems so that young startups, companies changing the status quo can come in and do things that are different and succeed.
Yes. We've also noticed that lots of companies in Brazil, they prefer to make their IPOs in the United States rather than in Brazilian markets. We have like PagSeguro, Stone Payments, XP Inc., which is like a Charles Schwab from Brazil.
Yeah.
Do you think that...
You know what, that shouldn't bother you, because as long as these businesses stay Brazil focused, Brazil is getting the benefits of the capital. You should think of this as a good thing. Brazil is an emerging market. Investors in developed markets want to find growth. Guess what? Your best growth opportunities are often in Brazil and India and China. So I don't have a problem with them making their IPOs. as long as they follow up by having a listing in Brazil, allowing Brazilian investors to also partake in the equity. So I think it's true, you want to go where there's more liquidity. And the reality is the US market is the deepest and widest and most liquid market in the world. So if you want, Alibaba made its IPO on the NASDAQ. It didn't make it in China. And China is a big liquid market, much more so than Brazil. You get a much more diverse global, because you don't get the US investors when you list in the US, you get global investors. So what you're doing as a Brazilian company is you're saying, look, our value as a company is going to be greater if our investor base is global rather than just Brazilian. We're going to go to a market where we're more likely to attract global investors. Because if you list on the Bovespa, the reality is I, as a US investor, will be unable, or it's much more difficult for me to invest in a Brazilian startup than if that same startup invests in the US. So basically, any global investor who's interested in partaking in Brazil's growth in the future has a better chance of doing it if that company is listed and traded in the US. Eventually, you want the liquidity in Brazil to get rich enough. But for that, the market's got to open up. It's got to allow foreigners to invest. It's got to have fewer restrictions on people who are not Brazilian investing in Brazilian stocks. Make it easier. That process is still messy. If I try to buy a stock on the Bovespa in Sao Paulo, it is incredibly messy for me to kind of go through that process. It's not as simple as getting on Schwab and say, buy 1,000 shares of Vale. It's much easier for me to buy the Vale ADR than it is to buy and that's true across the world. It's easier for people to buy the Vale ADR than it is to buy the local listing. So I think that if Brazil wants IPOs to eventually list in Brazil, it's got to start opening up its domestic market, reducing the rules and regulations and tax burdens that you impose on investors investing in that market. And one day, you're going to find more IPOs listing in Brazil than in the US.
Talking about IPOs, one trend we've been seeing either in Brazil or in the US, that there are companies that are not exactly tech companies, but they claim they are tech companies, perhaps for increasing its value. Like, for instance, we have Uber and WeWork. And do you think that that those companies are being very
they're framing? I mean, if you're single and you go to a bar and you meet someone you like, you claim to have a great job. Mm-hmm. And you claim to make a large income, and you claim to live in a big house. Mm-hmm. It's the nature of the process. They're framing it, and if you fall for the framing, I think it's your fault. Uber can say whatever it wants, but if you take an Uber ride, you know this is not a tech company. It uses technology to connect you with a car service. So I think if investors want to believe it's a tech company, I blame investors, not the company. The company is doing what it's supposed to do, which is framing itself so it gets the highest price. It's your job and my job as investors to make sense of, is WeWork really a tech company? Is Beyond Meat really a tech company? Is Uber really a tech company? And none of those three are really tech companies. They use technology to do the businesses they're in, but they're in the car service business, the food business, and the real estate business.
What do you think about the IPO of WeWork, for instance, that is currently on the trends?
Well, this is what happens when you have a business that you've built on what I call a knife's edge. The basic problem that WeWork has is a very simple real estate problem. They lease properties for 15, I don't know, they probably are in Sao Paulo, right? I mean, there's a WeWork building. Really.
We are currently on WeWork.
This building is the building you're in is a WeWork building? Okay.
Yeah.
So find out what the contract is. My sense is they probably lease the building for 15, 20 years. And then they rent out offices to people like you for days, weeks, or months. So basically, the mismatch is their commitment runs 15 years, but the customers they get are contracting for 1 month, 3 months, 6 months, often small startups, which are trying to take advantage of the fact that you can rent space in the short term. You're saying, what's wrong with that? All you need is a recession. Because what happens in a recession is young startups stop starting, and then all of a sudden your customers all leave. You're still stuck with the contract. So WeWork is a company that is growing incredibly fast by taking all these lease commitments. So there's a huge lease commitment debt, which means that for it to succeed, it's got to keep growing. This is like a Ponzi scheme. You got to keep growing, having more customers, having more leases. because if the process slows down, then the pain catches up with you. So, and the problem is, WeWork in a 6-week period has gone from being viewed as this successful real estate business to the company that I mean, my guess is the people who lease WeWork, the building you're sitting in, are probably really worried right now about whether WeWork will make its commitments. And if they could get out of the contract, they'd probably get out of the contract. And this is happening around the world, is in real estate deal after real estate deal, where WeWork was the lessor, or the lessee. The lessors are saying, no, I don't want WeWork as my because I don't know whether they'll be around. So it's very quickly unraveled. And part of the reason is they tried to grow too fast and took on too many commitments, and now they're all catching up with them.
Well, referring to IPOs happening in Brazil, this year we had a new issuance from a jewelry retailer called Vivara. And this company, it was valued by the common metrics like PE, EV to EBITDA, and market cap to revenue on a more expensive basis than like Tiffany's, which is a global peer.
Yeah, see, that doesn't bother me. I'll tell you why I think these metrics will fail. I mean, use any of those metrics for Uber. Uber will look incredibly expensive, right? But yes. if you read my blog post end of last week, I bought Uber at 30.
Yes, I read it.
And Uber at 30 will look more expensive than pretty much any transportation company in any multiple that you pay. But you know why these metrics were done? These metrics were invented for mature firms. So the bulk of the value is already on the ground. Your earnings are already coming from them. You could have growth, but growth is the side game. It's not the main game. When you invest in Uber or a Pinterest or a Slack, the bulk of your value is in the future. What you're paying in the market is for not the earnings on existing businesses, but what you expect them to do in the future. So on those metrics, these companies will always look expensive. So that's why old-time value investors did not buy Facebook, they didn't buy Google, they didn't buy any of the companies that are today the companies that create the market cap of the S&P 500. I mean, think about it. Warren Buffett has never owned Microsoft. He never owned Apple. He never owned Amazon. And as a consequence, over the last 20 years, he's had a tough time keeping up with the S&P 500. There's a price you pay when you use old-time metrics and you stick with them, is you'll end up with a lot of mature companies in your portfolio, and you will never buy those young growth companies that become the superstars of the future. But you have to remember that investing in these young superstar companies is a different kind of investment strategy. You can't buy just 4 companies and hope that they all do. You have to buy 15 or 20 or 25. And you got to spread your bets, because you're not expecting every one of your young companies to become a winner. You just want the winners in your portfolio to do so well. You know, remember, there's this talk of 10 baggers. So if you're an investor, you want a 10 bagger, stock that goes up 10-fold. These are the stocks that will go up 10-fold. Now, I'd rather take my bets on Uber at 30 than Kraft Heinz at 22. Now, the upside there is that if Uber can find a way to take its 100 million riders and convert them into pure gold, my $30 can become 250, and that'll never happen with the Kraft Heinz.
But is it a little bit difficult to pay for future earnings? You always
pay for future earnings, even for Kraft Heinz.
With
right?